Hey guys, my name is Chris, and today I'm going to tell you how, as a 25-year-old, you can use $10,000 to begin a great investment portfolio. Now, I have to start off by saying that I'm not a financial advisor, so anything that I say, I'm not telling you you need to go buy any of these things. I'm just saying, based on my own personal experience and my own research, these are some great options to start off in a portfolio. Now, to start off, like most people, as you kind of get to the age of 25, you're able to put away a lot of cash or however much cash you're able to put on, but it's all sitting in one place, and that's the bank. And the one thing that talking to people that are more financially free or older than I am, the one thing that they say is the worst place to have your money is in the bank. It's not doing anything. It's literally just sitting there and basically depreciating. So, what they say is to try and get that money into investment accounts. And that sounds great and all, but what does it actually mean to get money into an investment account? So, today I'm going to go over three good areas where you can begin putting your money into and watch it grow. When I first set off to put money into investment accounts, I wanted to put 90% of the cash that was sitting in the bank into investment accounts. Now, for some that seems like a lot, for some that seems like the right number, but I just know that I want to have enough to obviously live and to support and everything, but I want a large majority of my money out there, just to kind of play around with the different areas and try to get some long-term investments going. Now, when I first started setting up my investment portfolio, I just made a simple Excel spreadsheet, and I just put down the different asset classes so that I can keep track of where my money is, how it's growing, and kind of just keep track every month or every couple months, just so that I can see what it's looking like. So I made a mock-up based on that where you can use, and here we go. We can start looking at it. The first one. So the first asset that we are going to talk about is called the Roth IRA. And this may not seem like the most exciting one of the three. However, I think that this is the most important, especially at a young age, especially at the age of 25. What a Roth IRA is an individual retirement account. So it's similar to kind of like a 401k, except this isn't with your company. This is more of an individual basis. The major key about opening a Roth IRA, which I literally think that everyone should at least open a Roth IRA, is because of a thing called compounding interest. Compounding interest is when the longer that your money is sitting in an account, the more and more it's going to grow over time. So with this, there are a couple rules about a Roth IRA. Quickly, I'll go over. One, you can put up to $6,000 a year into a Roth IRA. So this is something that you kind of just chip away, put maybe $100 a week, a couple $100 a month, anything like that, into this account, and just kind of chip away at it. So up to $6,000 a year. And the other thing is, once you're putting the money in, you can't actually take the money out until you are 59 and a half years old, or so technically 60 years old. But like I said, with a thing called compounding interest, if you're starting to put it in at 25 years old, then you're going to be able to touch it in 35 years. And after 35 years of compounding interest, it's going to bring some astounding numbers, seriously. And when you take that money out, the other important thing is that it's all tax free. So this is something that you really need to start kind of doing when you're young. This is something that I wanted to do. Once I found out about it, it literally seemed like a no-brainer. So this is something that I think that is a good thing for anyone to start off investing in their portfolio. So as we scroll down here, the next asset that I have listed is cryptocurrencies. And I know there's a lot of controversy around cryptocurrencies just because there's been so much hype. But with anything, I think that the important thing is to just do your own research. Learn more about the different types of coins, learn about the kind of the technology behind it. It's not just prices going up and down. Kind of take a step back, watch some YouTube videos, learn more about it, talk to some people, and then you could kind of come up with your own idea, whether you like it, whether you don't like it. Based on my own research, there's a lot of things that I do like, and I'll kind of go over that in a future video. But with cryptocurrencies especially, the two rules that I've set for myself is one, don't just chase the price. So don't just see that Bitcoin went down a couple $1,000s today, so all of a sudden I'm just gonna throw money in at Bitcoin. Or Ethereum is up today, so I'm gonna take my money out. Like, the thing is you don't want to just be chasing the price, because then ultimately, yeah, you might make some short-term gains, but it's not going to work. And that brings me to the second point, which is look for long-term holdings. So look for something that you'd be willing to hold for a couple of years. Especially as being 25 years old and looking for investments, you have the opportunity to look for long-term investments. So those are the two rules. And with that, there's tons of cryptocurrencies out there. Obviously, there's the main two, which are Bitcoin and Ethereum. I have my preferences on certain coins, but I'll save that for a later video. But yeah, I think that it is an important asset to start putting money into. However, like I said, do your own research and don't just throw money in blindly. So now that brings us down to our third asset class, which is stocks and ETFs. So basically, stocks, as most of you probably know, stocks are just buying shares of an individual company. So if you really like Apple, you like Microsoft, Tesla, any of these kind of bigger public companies, you can buy shares and be a partial owner of it. The great thing about this is that when a company does really good, obviously the shares go up. So the price of the current share that you have goes up, and when you sell it, then you make a profit off of it. Also, because it is one company, when it goes down, obviously you have a potential to lose the profit. So with that, I think it is important to have it in there, but also there is a little bit more risk when you're investing in an individual company. The other option, other than stocks, is a thing called ETFs. So ETFs is basically taking a bunch of different companies and putting it in together into one price. So things like the S&P 500 takes the top 500 companies and puts them in together. The Dow Jones, the NASDAQ, which is for tech companies, these are all different types of ETFs. With ETFs, like I said before, it's when a bunch of companies are together, obviously there's not as much volatility. It's usually pretty stable. And when you look at long-term growths, there usually is a pretty steady increase. So if you're looking to put money in long-term, which is the plan as a 25-year-old, you want to be looking for long-term investments. I think having a mixture of stocks and ETFs is an essential part of building your portfolio. So those are the three assets that I personally am a fan of for building a portfolio. Now that you stayed to the end of the video, I could kind of talk about some percentages that I think are pretty reasonable. I think that obviously starting off with a Roth IRA, it is the most long-term investment that you have here. So I think that putting a pretty sizable of that initial $10,000 or whatever, putting it in to maybe around 40 to 50% of that original investment into a Roth IRA is good to just kind of have it there to sit and kind of forget about. Then with the rest of the 50 to 60% of your portfolio, you can kind of mess around with the cryptocurrencies and the stocks and ETFs based on your own research, based on what you personally think. That gives you enough room to have a solid start and use that to build a long-term investment portfolio. So be sure to write down any suggestions or recommendations that you have from your own investment portfolio. Then if you like this video, please hit that like button and press subscribe. This channel is a brand new channel, and I plan to continue uploading videos based on my own personal research, based on my own personal experience. And as I learn more about investment tips, I want to share that, and I think that this is going to be a good journey along the way. So this is 10K Trades. My name is Chris, and I'll see you next time.